Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. If you like these vids, then please subscribe to the channel and like and share. So let's take a look at the chart and what I'm potentially going to trade today.
Morning traders, how are you? I hope you had a nice long Easter weekend. Today is Tuesday the 19th of April, and you might notice something slightly different about our video today. You can see my face. Hello in the bottom left corner. I lost the argument with my producer, who is also my friend, and he said, Tom, put your face on the screen. I thought it was a bad idea, but here it is. I hope it doesn't put you off your trading. Right guys, so yeah, we're still going to carry on as usual. So we'll have a recap of yesterday's trades to start with, so Monday's trades. If you remember rightly, guys, we had two potential trades from Monday. The first one was this was the New Zealand dollar against the Canadian dollar. And if you remember rightly, we were just trying to short this market. It was in an uptrend, higher highs, higher lows, higher highs, higher lows, and then it didn't create higher highs, okay? This low kept intact. Okay, and then price didn't know what to do with itself. Okay, it was just ranging, and then we had this candle that broke these lows. Okay, so structure had changed. All right, and it was in a downtrend for me. Okay, and then the day before, Friday, we had this negative candle, and we also had this a few days before that. Okay, so all of these candles are telling me to short this market. Okay, and that's what we were trying to do. So let's look at H1 for execution. Right guys, yeah, so as you can see, price yesterday price didn't retrace up into our grey zone, but what did happen, and which is quite common in the markets, is this: that price came down. Now if we look at this zone here, so price came down, it was treating this area as support, yeah, came down, tested it again, finally broke this area, okay, and then came back up and tested it as resistance, and then we had this very bearish candle form. Okay, so you could have traded this pair from this candle here. Okay, this would have been a good entry candle. Okay, and then take price lower, aim for one of our higher time frame targets. Okay, I didn't actually take this trade because I actually took the Aussie dollar against the Canadian dollar, but yeah, you could have traded off of this candle, guys. I still think that would have been a good trade. Okay, all right, so that was New Zealand dollar against the Canadian dollar. Let's take a look at Aussie dollar against the Canadian dollar. Yeah, so these were the two pairs we were looking at. Okay, and again, on this pair, we were in an uptrend, so we had higher highs, higher lows, and then it was coming up and it didn't really create a new higher high. Yeah, this high always remained intact. It didn't break this high. Okay, these wicks left the high but closed back within this high. All right, so price was starting to break down. If you don't get a higher high, this is normally a good indicator that price is breaking down. Okay, and then as you can see, sure enough, price, yeah, at these lows here, okay, price eventually broke, and it was this candle here that broke these lows. Okay, that is why we were looking to short this market. Okay, and sure enough, you can see we had a very bearish candle form yesterday. But let's look at H1 to see how we could actually enter this trade. Okay, so similar story with the New Zealand dollar, Canadian dollar. Yeah, it didn't retrace up into our grey zone. Yeah, but price did come down, yeah, it broke these lows here, came down, and then it gave us some, you know, bearish candlestick patterns. We had this candle, okay, and even potentially this candle, guys, okay. Both of these tell me that sellers are in control. Okay, so yesterday I was aggressive with this trade. It didn't retrace as I explained, but I did enter on this candle here. Okay, so I entered on this candle, entered here, put my stop above this high, and closed 80% of my trade back at this low here. Okay, and that gives me roughly a risk to reward of 1:1, and then I let 20% carry on down to our blue line, and as you can see, it hit that pretty quickly. All right, so yeah, they're the two trades from yesterday. Both hit target pretty quickly. Both gave us opportunities to get into the trade, but for me, it was the Aussie dollar Canadian dollar that I traded, and it was this candle that I entered on. All right, guys, so yeah, I hope you took one of those trades. Both good trades, both in the right direction. Right, guys, let's take a look at today now and what we can potentially trade in the markets. Guys, if you enjoyed yesterday's recap, then please smash the like button. It really helps support the channel. And why not come join us? Subscribe to Simply Forex. Right, guys, so potential trades for Tuesday, the 19th of April. We've got 4 potential trades. 2 are the same as from yesterday. So the first one to look at is the New Zealand dollar against the Canadian dollar. We know why we're taking this trade. We've explained it enough. So it was in a sort of sideways action, and then price with these candles has broke. It's broke these lows. Okay, so now we have lower lows, lower highs, prices in a downward structure. Okay, and we had this very bearish candle form yesterday. Yeah, so this just tells me, you know, price has momentum to carry on downwards. Okay, and we're looking to come down to this blue line here at around 8416. Okay, so we're looking to short this market like we was yesterday. Let's look at H1 for our execution. So we've got a couple of grey zones, guys. So first of all, price could retrace into this grey zone, and then we want to see a bearish candlestick pattern form. That's always our trigger to enter the trade, and then we'll get into the trade. We'll take price back down to these lows here. If we get a risk to reward of 1:1, at least 1:1, we'll close 80% of the trade here, and then we'll let 20% run down to our higher time frame target. Okay, if that doesn't happen, guys, price could retrace up into this grey zone, but again, we just want to see a bearish candlestick pattern. We'll enter the trade, take price back down to these lows, close 80%, and then leave 20% to run down to our higher time frame target. Okay, so yeah, New Zealand dollar, Canadian dollar short. The next trade is the Aussie dollar against the Canadian dollar short. Yeah, so seeing some Canadian dollar strength. But again, yeah, price was in an uptrend. Yeah, we had higher highs, higher lows, and then it didn't break or make higher highs. Okay, and then eventually these lower lows were broken. Okay, so we're now in a downward structure. Okay, a downward trend. And again, if we zoom in a little bit, you can see we had this very bearish candle form yesterday. Okay, so we're just looking to take price back down to these lows here. Okay, let's look at H1 for execution. So yeah, as you can see, guys, just the one grey zone. We want price to retrace up into here. We want to see a bearish candlestick pattern. That's our trigger to enter. We'll take price back down to this low. This is always our first target. Close 80% of the trade and then leave 20% to run. Okay, so yeah, that's our second trade idea, Aussie dollar, Canadian dollar short. Our third trade idea is this. This is the Aussie dollar against the US dollar. Okay, guys, so price, as you can see, was in an uptrend. Yeah, we had higher highs, higher lows, higher highs, and then we had these lows here that were broken, but we also had this area here which was looking like potential support. Yeah, price could have quite easily come down and bounced off this, okay, but it didn't. Instead, with this candle, yesterday's candle, it broke this area. Yeah, so this candle here, yeah, broke this area of support. Okay, could have bounced off there, it didn't. Instead, yesterday's candle broke that zone. Okay, so this tells me we have room to the downside, and I'm just trying to take price back down to this psychological level of 7307. Okay, guys, so we're looking to short this market. Let's look at H1 for execution. Okay, so we're looking for price to come up into this grey zone, okay, which it already has done. Okay, so come up into this grey zone. Now we want to see a bearish candlestick pattern. Once we get that, we can enter the trade. Okay, then we can come down to this low where we close 80% of the trade. If the risk to reward is 1:1 or more, and then we can leave 20% to run down to our higher time frame. If that doesn't happen, guys, then price could retrace up into this grey zone. Okay, but again, bearish candlestick pattern, enter, close 80% of the trade at the lows, leave 20% to run. Okay, so Aussie dollar, US dollar, we're looking to short this market. The fourth trade for today is this. This is the pound against the Aussie dollar, and we're looking to long this market. Okay, so we're seeing some Aussie dollar weakness. Okay, so with this market, guys, as you can see, price was clearly in a downtrend. Yeah, came down, created higher, lower highs, lower lows, and then this area here became interesting. Yeah, okay, this became an area of resistance. Yeah, tested it, come down, tested it again. Yeah, this candle potentially could have taken this lower, but it didn't. Okay, and then instead we had, let me zoom in a little bit, and instead we had this candle here yesterday that broke these highs. Okay, it broke these highs, and so for me, structure has changed. We are now in an uptrend. Okay, so yeah, we're looking for longs, guys, and we just want to try and take price back up to this last area here, these last lows here. Yeah, we just wanted to take price to that blue line there. All right, guys, so let's look at H1 for execution. Right, guys, yeah, what I'm looking for is price to retrace down into this grey zone. Okay, it's quite a large grey zone. There's lots of difficult price action. Yeah, we want price to retrace into this grey zone. We want to see a bullish candlestick pattern form. Okay, and then when we do, we can take price back up to these highs. Okay, close 80% of the trade and then leave 20% to run. On this trade, if you're particularly aggressive with it, we could get a candlestick pattern form here or here. You could take that candlestick pattern up as well if we're trading it a little bit more aggressively. Okay, so yeah, they're the four trade ideas for today, guys. Let's take a look at the news now. Guys, if you're enjoying this daily morning analysis and would like to receive it every single morning, Monday to Friday, then please subscribe to the channel and smash that notification button. That way, guys, you'll receive an alert every morning and won't miss a single daily analysis. All right, guys, so the news for today. Overnight, we had some important news coming out of the Aussie dollar. But that's been and gone. It's quite a light news day today, guys. The next piece of important news we're looking at is this at 12:30. We've got building permits coming out of the US. So this is a 3-star rating and could potentially move any US dollar pair. But that's it, guys, for today. If we scroll down, yeah, there's no other 3-star ratings that we're interested in. Okay, so guys, yeah, I hope you've enjoyed the morning analysis. If you have, please subscribe, like, and share. I hope you have a wonderful trading day, and I will see you tomorrow, guys.